Good afternoon. Welcome to the TheoTRADE afternoon video. I am Blake Young. Today is December 12th, 2024, and we're going to be talking about operating margin setups in the long term off of technicals. Now, what I have on this chart is something we will be talking about tomorrow morning in the TheoTRADE live Friday morning. We were going to talk a little bit about inflation data, the fact that CPI is rising from the previous reports year over year and rising and month over month. And PPI is even growing at a faster level. So core CPI and CPI, Consumer Price Index, and Producer Price Index are both showing that inflation is not slowing down. In fact, it's accelerating. As we look into the economy, it's telling us that things cost more. That would be the exact time you want to raise rates to cut or slow that inflation. And yet, the market is pricing in a further rate cut. So next week on the 18th, we're pricing in a 94% probability that we're going to raise rates, and that is with rising inflation. This tells me that the Fed thinks that something is wrong with the economy, with the growth, with the employment, as their dual mandate is to keep inflation in check while keeping employment rising. So as we're looking at this is an indication that we would seem to be seeing something that goes against what we should be expecting from inflation, so it must be other aspects of the economy or other aspects of employment. And if we jump over and look at the S&P 500, looking how prices traded up to these highs, if we are seeing a slowdown, economic slowdown, we're probably going to see equity struggle. We know that there is still performance chasing, pushing some of the strongest stocks to their highs, while we're seeing tax harvesting or tax loss harvesting as we're seeing some of the weakest stocks sell off. And we're getting a real mix. Today is a very mixed day where the dollar is strong, consumer staples are strong, which would be theoretically a warning, but yet communication is doing well. And so very mixed bag. We don't really have a clear signal as far as sector rotation, but if we're getting that uncertainty, and you can see that I've drawn my channels off the highs and lows here. If this is the top, this is the rate I expect it to fall, and I'd be looking for about a drop to 590 by next week, about the same time the Fed's talking, if this is the peak. If it's not the peak, then we have a bounce off of this support level, and we could be going all the way up to 620 by that same Fed date. So the rate cut has already been priced in, I believe, with a 94% probability. And we'll talk about that again more tomorrow morning as far as the core details behind inflation. But if we're getting some uncertainty in any way, shape, or form, which clearly we are, then I want to look for the safest trades. And what I discussed in today's live main room at TheoTRADE is we can look at operating margins. Operating margins are also called return on sales. It takes a look at the net income or the net revenues and says, how much did we make against that net revenues after we take out our costs, including wages and depreciation and the costs, the variable costs associated with those revenue sales. If that's negative, that means we're not making money. And so it means we have loss leaders, or that we're losing after we pay all of our expenses, and it doesn't matter whether those revenues are positive. It means that they're going to have to either cut costs or they're going to have to raise debt to be able to survive. So I want to find the companies that don't have that issue and that are showing that we have good operating margins to work with. Now today I talked about consumer discretionary because they were performing well. I've talked about technology. But now in the after hours, I want to talk about consumer staples as one of our key things. So consumer staples has fallen back. You can see that something like Coca-Cola is back at these lows. Today, consumer staples has been the top performing sector of the day. And as we're watching this, I want to look at those companies that had positive margins, positive operating margins. So Coca-Cola is doing well, and you can see Coca-Cola is gapped up and closed higher. There's not a lot of risk to be able to take this trade as a higher low, and if it makes a higher low, higher high, I'm looking at Coca-Cola to go at least 5% up to 66, if not all the way back up to 70. So Coca-Cola not only has an opportunity to be bullish, but it's also a dividend-paying stock. If we can stick with these companies that have positive operating margins and growth opportunities, we'd look at something like Walmart and Costco. They're near their highs. Costco has earnings. We're doing a butterfly on this one. But as we're watching these, they have potential for sure. But we want to find the ones that are discounted in these moves, not at their peaks. So if we can find something discounted that is still making money, to me that is the lower cost, lower exposure, lower risk setup. So rather than chase those retailers, we're going now into these deep discounted Coca-Cola, deep discounted PepsiCo. And as we're looking at this move through here, Pepsi is not bouncing today like Coke is, but it's again a company that makes operating margin. They're positive in their operating margin. And if we're looking at this, we could see the same consolidation. If it can break through its highs, we're talking about a move back to 167, maybe to fill the gap at 170. And I would call that an 8 to 10% move in Pepsi as well. Take a look at Kraft Heinz. Same kind of idea. Higher lows, potentially higher highs. Setting up here, they are operating in a safe place. They have profitable operating margins. They have earnings that are consistent. And we'd be looking at a move back to 34, maybe up to 35. And I would say the same thing on something like Procter & Gamble. Near mid-price, it had a widening pattern. I just need a bounce and a move higher, and we could go from current price 170 back up to the highs. That's going to give you another 5% move up. And these are just setting up for some safe plays. Again, I don't mind Costco and Kroger and Walmart, but these are the ones that are discounted in this consumer staples space that are going to provide you a discounted price while also providing those profit margins. In that same vein, if we looked at utilities as something that's now been discounted back to a key support area like PG&E, falling back to these key support areas and not breaking through, we're going to watch for a bounce, a trade above the previous high or a higher close. And this would also give you a company that has positive operating margins, has been discounted from its recent high, and just a swing high, meaning a return to retest the previous high. This would give you another 10% move. So we're getting these 10% moves on these discounted stocks just to go back up to the previous levels after they've been discounted, sold off, while they're still in highly profitable situations. We could do the same thing with one of my favorite utilities, which is NEE, Nextera. Nextera is at its support level, hasn't given us the bounce yet, is finding the support level, where it was a support level barrier over here. If it defends here and gives us a higher close, this could be an opportunity to take a trade from 74 all the way up to 86. That's going to give you a $12 move. That's going to be almost a 15% return on that trade, or return on risk if you put a stop at a fairly snug spot after you see where that bounces. You'll also notice that the volume is disappearing in the selling. We're liquidating or selling off on very light volume. People are not committed to abandoning a utility trade at this point. Take a look at VST. As we're looking at VST, higher lows, defense at a similar area. Yesterday was a tough call on whether that was enough of a bounce because it cleared the high, but it was a flat day at Doji. I would want to see a follow through with a little bit more of a solid upper close, but you can see that it goes into this pattern, pulls back these moves from 116 to 168. That move was almost a 50% return. Even if we go from the low 145 just to the high of 168, we're talking about nearly a 20% move up. And so VST is setting up as well. I just need to see some sort of confirmation that we're done falling, and these two flat days were not quite enough, but it's good to remind us that, hey, this is a company, like all the utilities, that are generally going to be operating in profitable scenario. If they're not, utilities are not one that we want to chase down because their dividends are based off paying off their profits. So on a company like VST that has a solid operating margin of $10 a share, this is a nice setup for the next move higher on VST. The counter could be true. We could take the time to find some very weak stocks that don't have profit margins and try to find those that are setting up for a reversal. But I just wanted to show you there are still stocks that are in the defensive areas that have good operating margins that can set up for very long-term trends. And not only long-term trends, but stocks that are normally safe stocks. We don't normally look for 10 and 15% moves, but these are all setting up for that kind of scenario. So I am looking at these to give us some sort of confirmation, give us that confirmation with giving us a higher high, higher low, break out of this pattern, and we are looking for 5, 10, 15% moves up with paying a high dividend in a stock that has positive profit margins and in a point where the market is getting a little bit uncertain. That's where I'm looking for the safety while also looking for growth and looking for income in those dividend stocks. So that's going to do it for me today. Join us again. Like I said, tomorrow morning, Brandon and I will be talking about inflation data and these expectations for the Fed meeting next week. We'll also likely be joining you on Fed Day as well. But this is what we're watching and we're seeing the market set up for. So join me in the morning, and if not in the morning, join me again next week on Thursday's video.